welcome everyone to the Asset and Investment Review Task Force. I am Marlo Oakes, the State Treasurer, and am chairing the task force, and appreciate everybody taking time out of your schedules and joining us. And I think this will be a very interesting and unique opportunity for us to look at some things that haven't been looked at for a long time, and certainly could drive some interesting conversations. So the task force, as you know, is a result of the legislation that was passed this last legislative session, SB 323, sponsored by Senator Stratton. He will be joining us online. And then Representative Val Peterson was the sponsor in the House. He's online, joining us as well as part of the task force. And so why don't we just briefly go around and introduce ourselves, and if you can also just mention the organization or the group that you're representing, that would be great. And we'll start here in the room, and then we'll go online. So to my right.
I'm Howard Headley, Utah Bankers Association.
I'm Auburn Business Administrator for Brandon School District. Billy Hesterman with the Utah Taxpayers Association.
Rusty Cannon with the Utah Credit Union Association.
Dan Gardner, I'm the Chief Examiner for the Department of Financial Institutions.
Paul Jerome, Assistant CAO at West Jordan City, and I'm representing the League of Cities and Towns.
Jason Allen with the Financial Audit Director with the State Auditor's Office.
Tina Cannon, State Auditor.
Alex Nielsen, I do data stuff with the State Auditor.
Brittany Griffin, Policy and Communications Deputy for Treasurer Oaks.
And on the line, LeGrand.
Hi, LeGrand Bitter with the Utah Association of Special Districts.
Great. And let's see, Kim.
Hi, Kim Jackson, Utah County Treasurer and representing counties, and LeGrand and I served in the same mission.
Elder Jackson, how you doing?
Good. How are you doing?
Great.
And what mission is that?
That was Philippines Manila mission way back in the day.
That's right, Steve.
Wow. That's great. And Brooke.
Brooke McCarrick, Attorney General's Office.
And Scott.
Scott Jones, Deputy Superintendent of Operations, Utah State Board of Education.
And let's see, Val.
Val Peterson, Utah House of Representatives, District 56, which is Northwest Orem, Vineyard, West Linden, a little bit of American Fork, and a little bit of Pleasant Grove.
Excellent. Welcome. Let's see. And this
Jason, from our office.
Oh, from our office. Okay. Jason.
Jason Nielsen, Finance Director at the State Treasurer's Office.
Okay, excellent. And I guess
that's everybody. Did we miss anybody?
Go down, everybody.
Sometimes it switches order on the screen.
That's true. All right, excellent. So you can see on your agenda the task force objectives. And so I don't know, do we go through those or okay, so first of all, looking at reserve levels. So as probably everyone knows, the reserve levels have grown across the state. During the legislative session, it was really the school districts that were up first in the firing line and had to answer questions, why so many reserves. But the reality is, it's true across all kind of entities across the state, cities, counties, school districts, the state itself. We've just seen a growth in reserves. And so looking at one of the things we'll do is look at current reserve levels and talk through appropriate thresholds for public entities, and then analyze kind of the drivers of growth in the reserves and assess if adjustments are needed. And then looking at investment strategies for public reserves. So evaluating investment strategies, looking at safety, liquidity, return, and economic impact. So this is really where looking at deposits with local financial institutions versus investments in kind of money market type funds, just looking at what is the impact on our local economy by putting reserves on deposit with financial institutions, and then comparing that to the returns in the public treasurer's investment fund or other similar vehicles, and then developing recommendations. So looking at potential policy or statutory changes to that would be in line with the things that we discuss, and then we need to submit a report to the Executive Appropriations Committee by November 30th, 2025. So, and Representative Peterson, I believe, is that your committee? Executive Appropriations.
I believe it is.
I think it is. So yeah, he may just be tied up. So anyway, so it's great to have him here as part of the task force. So any questions on that?
So I apologize. Yes, that's my committee. I was in the middle of another discussion. So, but we look forward to the report. So it'll be very helpful.
Thank you.
So I have one question. Is there an issue going on with this? Is that why we're looking at it, or is it just kind of a review and making recommendations for best practices? I was just curious if there was something that the legislature saw that was concerning to them about this.
Yeah, I wouldn't say there's anything concerning. It's more of looking at are there advantages to putting money on deposit with financial institutions locally, looking at why are there so many reserves, and are there justifiable reasons for that, or maybe there are policies that could be changed, for example, reducing taxes, or something where maybe these the different municipalities or whatever are taking in more money than they need. It's just looking at kind of these different issues, and not that there is a problem. It's more of, here's an opportunity to just maybe decide if we can be more efficient. Howard?
I guess it depends on how you define problem. I don't think anybody's suggesting anybody's doing anything inappropriately, if that's the question. I think what the question is just from a broad strategic standpoint, to the points that you were making. How much should we have? How much should we be taking out of the economy through taxation, holding in reserves? So that's the first big question. I think the auditor's office provided some great insights into that. But I think that's a very multi-layered question. What drives that? What is driving it? I know my involvement with public schools and public charter schools specifically, the folks who are involved in our debt through the financing authority that you chair, bondholders would always like to have as much in reserve as possible to lower their risks. And they're being compensated for a certain amount of risk. And they'll continue to push for more and more to be held in reserve, which lowers their risk, but it doesn't necessarily lower the interest rates that they're paid, right? So a big part of the reserve issue is driven by the debt markets. And I think we need to explore that. I know S&P, when they talk to charter schools about how much days cash on hand they should have, I've found that discussion as a financial person to be a bit offensive, as those numbers get to a point that just, yeah, it's great for them. But the legislature, on the other hand, funds public schools on a monthly basis. in a particular fiscal year to teach those children that year the things that they're supposed to learn that year. Yet we don't always spend all that money that year to teach children in those years. So that's one little microcosm of issues that I think taxpayers are concerned about being taxed to build reserves. And then the other side of the equation is, what is the best interest of the state in terms of where that wealth is deployed? You know, if we're taking it from taxpayers and they're not spending it in a local restaurant or in a movie or to buy a car or to buy a home, and we have $36 billion sitting somewhere in various locations, where is it best to deploy that wealth in terms of in investment? And I think part of the reason why we're here is we have a serious problem that Marlo is exceptionally good at his job. And we have the Public Treasurer's Investment Fund that is a great tool for state and local governments and has attracted a lot of this wealth. And then where is that being? Well, I know you've had conversations with people questioning you as to where it is and what is it being invested in. From a financial institution standpoint, and I won't speak for the credit unions, but we feel like there's an argument to be made that you can't take $36 billion out of the tax base and deploy it outside the state and expect to have the kind of economic growth we need. And so, Kim, to your question, one of the things that led us here was a discussion where the governor announced that he wants to build 35,000 homes in 5 years of a certain type. And we heard about that. The banking industry heard about that when he announced it, I think in a state of a state or something. And most of the bankers that I knew picked up the phone and called me and said, well, who's going to fund that? How are we going to finance that? Because banks are generally, and I think credit unions as well, we function best when all of our deposits are deployed in the form of loans. And so we're at maybe 90% of our deposits deployed in loans. The governor wants to take on an initiative that bold. We're going to need a lot more deposits to finance the construction of those homes. So when he turned to us and we said, well, so then they came to Marlon and said, well, can we use some of the PTIF? And he said, well, if you do that to me, the local governments just aren't going to stop giving me the money. And so we decided we had to look at this whole picture and say, if we empower local governments to take money out of the tax base through the power of taxation, to the extent it exceeds what they need, i.e. reserves, should there be a requirement that that money in reserve be reinvested in Utah? I don't know that we'd say is specifically within the boundaries of where it was collected in taxation, but at least in the state of Utah, so that that money was working for us here, i.e. building 35,000 homes in 5 years, or the gas stations to serve that, or the roads to support that, or the theaters and restaurants that those people living in those homes will need. I mean, it's not just the homes. There's a huge amount of investment that goes on. And when you take 36 billion and you send it somewhere else because you can make a higher return, that money's not available here to build the things that we need to build. So I don't know. That's my perspective on how we got here, is being in all those meetings with you, Mauro, and seeing the pressure put on you, again, for doing your job really well. But it wasn't going to be solved in a legislative hearing or in a legislative session. And my recommendation was we need to get all the parties together and have this broad discussion in this task force so that we can meet the mission of the state of Utah in terms of, what we need to accomplish with the growth and housing and all those other issues. So hopefully that's helpful.
No, that's great. Yeah, thank you for that. And yeah, I mean, it points to some of the, I guess, trade-offs, right, that we're dealing with. You have the need for capital in the economy. You have investment portfolio that is, I act as a fiduciary on behalf of all of the participants who are beneficiaries of that portfolio. We do have the ability to, and any really public treasurer has the ability to put money on deposit at financial institutions. Generally, there's generally a lower return depending on how that, deposit is placed.
And how you measure return.
And then, yeah, and so there's the discussion of, all right, you have a financial return that's you keep on, and but then are there other returns that would accrue to the benefit of all of us as citizens of the state by having money that is put into the economy for some of these projects that are needed, right? And so how do we think about all those things? Kind of on a macro level. Is that fair? Yeah, so that's probably the more complex portion of this task force is thinking through that, and we do have, I'll just kind of skip down to number 4, the procurement. We have gone through a procurement process to identify a vendor that can help us as we think through those trade-offs. Essentially an outside expert or firm that can help us look at what is the economic impact of putting money on deposit at local financial institutions, and how should we think about that versus investing in something like a money market fund. And so we have selected a firm. We are in negotiations with them, and so we don't have a lot of detail that we can share right now, but I think everybody will be what's the word? I think everybody will be pleased with who we have, and we're comfortable with the direction there, and hopefully we'll have more information that we'll be able to share next meeting. But so with that, I'm going to turn it over to Alex from the State Auditor's Office. Tina, is there anything you wanted to say, Auditor Cannon, before?
Sure. So I think as the discussion happened during the legislative session and we were being asked the question over the PTIF account and the balances in the PTIF account, I might have raised the point that that is not the only cash. And if you just look at one, you don't get an overall view of what the cash and cash equivalents are for the entities across the state, which is how we got there. So when you talk about cash and cash equivalents for going on 1,800 different agencies across the state of Utah, that's a complicated data problem. So when Alex introduces himself as the person who does data stuff, he undersells himself substantially, because as we collect all of those comprehensive annual financial reports for all of those entities, and then we also have all of their interim reporting through Transparent Utah, it's putting that information in a searchable, usable format for you to be able to make decisions with. So with that background, pulling all of that information, and we've had Neil Walters has also requested this as a cash and cash equivalents report. So we are trying to pull all of this information together for both information that Marlo has, that the state auditor has, and then put it in a usable format for you. So this is a work in progress. If you see areas where it can improve, please let us know that. Our job is more in this discussion is to provide support for the data for what the numbers are that are out there. So with that said, I'll turn it over to Jason, who's my financial audit manager. So he's the understanding where the reasons why it's there and where you can find that in the financial reports, in their statements, in their footnotes for why the reserves are what they are and what they are there for, so.
That was a perfect introduction, I'd say. So, data stuff, what do we mean by that? We got a lot of different sources here. We have the treasurer's office. They every 6 months will collect deposit and investment reports from any local governments. And then we also have the annual comprehensive financial reports as well that the state auditor's office collects. And there's two kind of strengths to both of these data sets. So the DNI, the deposit and investment report, it has recency, right? Every 6 months, we're getting an update, and there's a lot of detail here in this data. The ACFRs, the annual comprehensive financial reports, or annual financial reports are great, but it's PDFs. It's hard to get some of that data out. And our local government team actually, since about 2018, has been pulling out some key numbers and metrics out of those annual financial reports and entering them into a database. So what we're going to be looking at today is us helping visualize both of those reports at scale across the entire state. We have some basic visualizations that, for me, I think are kind of interesting, but really what we want is for you guys to give us input and say, yep, we like these, or we're looking for additional data to help us make these kind of decisions. There's already a couple that I know that we'll need some help with, so I'll leave those for the end. But this is what I'm calling right now the Asset and Investment Data Explorer. This link will be going out to all of you pretty soon, probably later tonight or first thing Monday, depending on how we want to deploy this. And there's 3 sections in it right now. So this first section is called Deposit and Investments, and it has this little dash all. And what it allows you to do is first select a government type. You can select all the government types in the state, but it'll just load a little longer. Right now, we have school districts and charter schools available. I'm going to try to minimize this so we can see a little better. And we have the DNI reports right here. So for this report, this is like June 2018, December 2018, and so forth, all the way to June 2025. And when we're over here, we can also select certain entities. Right now, we're looking at every LEA, or local education entity. And you'll notice on these deposits, we have a few different types of deposits here. We have checking, money market, PTIF, sweep, and savings. And then this green dashed line is the total of all of these deposits. So you can hover over any of these and see what's in here at scale across the whole state. What if I just wanted to look at a single one? Does anyone have a school district? Do we have West Jordan?
Hey, Jordan, I'm here.
Granite. All right, let's do Granite. Let's see how it looks. So I'm going to go here and I'm going to select Granite School District. And now we can see not only has the legend changed, the charts changed, and all this individual data has changed. And this detailed table you'll see has a lot more to it than what this line chart shows. So if you want to dive into the individual report and see all those deposits, this is all available here. You can see the amount held, what the account type is, its fund assignments, the qualified depository, sweep rates, credit rates, etc. So a lot of cool information here.
Can I ask you a question? So is this cash in these accounts, or is this reserve? Because those are 2 different things.
So this is,
So-
you've got all of them at this point because the individual reserves that are held are not necessary. The individual entity will have different requirements for the different reserves. So it's near impossible task for us to say, this is a reserve account for this type of thing. And that was our caution back to the legislature is for the reasons why it's there. There are as many reasons as there are entities. They all have different reasons that they're putting it together. So we divided it into the types because the different reserves and what is held in each reserve is a really complicated question.
And that's why I asked, is because I know it is from having been a finance director for a long time myself.
So that's been my caution through all of this is to do a true reserve study and why it's there. To go through all of those entities becomes more and more complicated on how do we present you that data in a logical, readable, comprehensible format for this amount of data.
Alex, does it go further back than 2018?
It does not. We can look into getting additional data from the deposit investment reports, but that would require contacting entities and
Okay.
it'd be a lot of work.
I just thought with the
Yeah.
historic, if we're looking at kind of the determine current reserve levels and appropriate thresholds for public entities, I was just curious. If we get a longer historical content might give us more.
Some of the dashboards that Alex has put, 2018 has been kind of a common one. So that we can kind of capture the pre-COVID. We've got a bunch of funding that's coming.
I just was
from COVID, and then so you can kind of see that bump or whatever else.
Yeah.
Really, so when we started building the financial data dashboards, we wanted to go back as far as we could. 2004 is you get a good 20-year history on it. But when you're talking about these kind of entities, and forgive us, it's only been 2 months since we got out of legislative session, it's a bigger lift because AI is not to the point that we can crawl through and have real confidence in that data. So we have to go back to when we started putting it into our reports. If we want to go deeper than that, we can. It's just going to take us more time or at least dedicated resources to the office for who we assign on that big of a project. So there are some limits. It's not ideal, but it's what we could do.
Yeah, and really what the reserves start taking off after COVID, right, when all that federal money.
Well, and that would be helpful to know how much of it was that. Up at the legislature, we focus a lot on the PTIF. It's been kind of the weather vane, that this conversation has been built on them, but knowing that, first of all, not every entity uses the PTIF. Second of all, a lot of folks have become more engaged in the PTIF recently. So I think trying to understand those trends would be helpful. How much of this, so we based a lot of our assumptions on that discussion, and it could just be that the reserves have been pretty stable in mass. There's just been a movement from one bucket to another, and we're seeing that bucket and going, what's happening? So we have to somehow get to the bottom of that.
These are all excellent points. And one of the reasons why we included all of the other accounts or why the recommendation is there is if the focus turns to one particular type of investment account, we're the auditor's office. We see bad behavior. We see people who like to just move it out there because then there's nothing to look at. So to get a better overall view, you need a broader picture, but you can then focus on one line of all of the investments, knowing that if it's off the trend line, then you have the other accounts to go check to see if it's moved somewhere else. You can see an overall picture for an entity you might have questions on.
And again, anecdotally, right now we're talking about
Anecdotal.
how much is being held in reserve of whatever type by public entities in Utah. And so the longer we look at that, the more instructive it'll be, to Rusty's point. But I know, again, I founded a charter school called APA, and I was the chairman for the first 10 years, and I was in charge of the budget. And I remember going through the conversation with S&P about our first construction projects and financings and what their days cash on hand recommendations were, and arguing with them about that back then. My background's in accounting, public accounting. I audited school districts and other public entities. And we just we're going back to market right now. And I hear the conversations, and it's crazy how much has changed in just the last 7-8 years in terms of what S&P is requiring to get an investment grade rating in terms of days cash on hand. And I'm like, as a taxpayer advocate, I'm like, this is bull. I get your bondholders want that, but how is that good for taxpayers in the state? So that,
Well, yeah, because they're saying if a public entity like a city wants to bond for a water project or a sewer project or whatever, and you're going to go get you haven't had a ratings session with anybody in the last few years. Those, just to get your bond rating, they want that too. They want to go, you're not even going out to market for a bond yet, and yet they're actually dictating that as well. So when you have enterprise funds where they're saying, hey, we want a minimum of 50% reserve, fund balance reserve, unallocated, unreserved. And yet they're saying, but we prefer even more than that. And depending on the size of the city, that could be a big number, right? But also you're constantly being told that, well, if you want to get the best rates, which then reduces your exposure for paying on that bond, then you need to have as much cash on hand as you possibly can. And going below that 50% fund balance reserve is kind of no man's land, and then, or they want assurances that you're going to raise rates too. So then you're actually in a rating session saying, okay, yeah, we'll commit to raising rates. To
Should I ask you a personal question? Being a newbie here, what does that mean? The 50% question you just mentioned, does that mean we need to have 50% of your total budget in reserves?
Yeah, basically, half a year in reserve. So half a year of your income for that enterprise
Is
fund.
that more than what the statutorial limits are for, like rainy day funds for an entity, or is that?
Well, if you're talking about general fund balances, it is, because general fund can only go to 35% fund balance reserve. So yeah, you're actually going beyond that, but these are separate, these are different.
Right.
Funds we're talking
No,
about.
I'm not trying to lose anyone's.
Yeah, no, yeah, so we're talking about enterprise funds versus general fund, but same thing can happen with a GO bond too. I haven't been a part of many GO bonds in my time in municipal government, so I'm not as familiar with what financial institutions are requiring for those, but a lot of times those will be tied to well, of course, property tax, but there's other ways to go about bonding for a general fund project. If you don't want to go the GO bond route, you can do sales tax bonds, things like that. So sales tax revenue bonds.
One of the things that, so when I asked and probed as to why this number was so much higher than it was just 8 years ago, they said, well, we just take the average of all the charter schools in the state, days cash on hand, and said that must be the reasonable
Not even
number.
not even based in anything that's associated with risk at all there. It's just.
And when I looked at it, I'm looking at some charter schools that had over 300 days cash on hand. And I was like, they're killing us. And why are they holding on to that money? If they don't know how to spend the money to educate kids, they should give it back to the state then. Not sit, it just creates this, so to the point, Marlo's expertise can come in terms of the debt markets and what is reasonable to expect and what's unreasonable to expect. And they're getting, in this charter school standpoint, they're getting like a AAA rating. It's not quite, but it'd be. Utah's debt is pretty attractive out there. Am I wrong, Marlo?
Yeah.
Right? So how much more attractive do we need to make it by sitting on all this money? So that's, and to the extent that if the state could take a policy and say, okay, charter schools can't hold more than X days cash on hand. If you can't spend it and teach kids, you got to give it back. I mean, I'm not suggesting, I don't want people to go crazy in the charter school world, but just say maybe there are policies the state can put out there that would push back against what the bondholder, those groups are asking for. And you can say, well, we can't do that, so you can't demand that. I don't know if there's push and pull, but there is a whole discussion of this is why is it so, why do we have so much in reserve? What's driving that? And is there things we can do to reasonably put that money back in the hands of taxpayers or deploy it, to teach children or something like that? Those are the questions that legislators are asking from this group.
I'd be curious, because you're out of my area of expertise for why, for the days cash on hand requirement for a bond. But I would think if the trend that I'm seeing is based on the additional cash revenues that from the federal government came in during COVID is building a cash balance overall in these entities. If you're basing what your standard for cash on hand is during this time period, you're creating an unfair expectation for these entities to maintain that amount of cash over time. Because you're gonna see it go back down if the cash is being held because of the influx from COVID. But you're setting the standard now for days cash on hand, you've got a long-term impact that is unsustainable.
Fair point.
Maybe I can jump in real quick. I was gonna mention the same thing. I know the counties are still sitting on a lot of this federal money that came in 2021, and until it gets spent, our cash balances are higher than they would normally be until we disperse all of that money to the various projects, within the next year or two. So I don't know if that's playing into this, but I was going to make that point that we're still sitting on a bunch of cash that will eventually be spent.
And it would be nice if we could figure that out too. I mean,
Yeah, I think I think that any discussion over cash balances has to include the amount of money that, because there was a requirement though, that money from COVID or the CARES or whatever they wanted to call it, a particular program is there. It freed up their normal revenue sources. So you don't necessarily see it as COVID money per se that's sitting there, but excess revenues because the COVID money was able to be used to replace those normal expenditures. So you're seeing it. And that's the other caution in looking at it. You may not see it exactly classified as COVID money, but it is an excess in reserves that was generated because of the revenues they were getting from COVID.
But, sorry,
Go ahead. No.
would it be safe to assume though that eventually that would eat up into the general fund? Because if you're using that to build programs or capital projects, something's gonna have to maintain those over the years to come after that money's spent.
That is it. And that is the caution, because we tend to be the cautionary office of in the state. That's the caution is understanding why the reserves are there. There was a requirement. It depends on how they built it up. If it was going for an actual capital project that is in progress, then yes. But if it was going in to replace your normal expenditures in operations, so now you have an influx of cash that is replacing that, then you'll have an entity that will have an unrestricted amount of money. School districts are going to be, counties are different, cities are different. School districts are going to be a little different. If they use their COVID money for a capital project, that restriction on capital and operations happens at the implementation of the tax. So you'll see a growth in one of those two funds, and you may have a very simple legislative fix in allowing them to move funds from one to the other to be able to adjust for that kind of revenue increase. So I think that's the interesting part of the whole discussion when you talk about, do you separate the entities out by the type of entity they are or by the amount of cash that they have on hand in how you're analyzing this? Because you're going to see some trend lines based on the type of entity they are.
can I just ask, I hate to put him on the spot, but Scott Jones is a pretty brilliant guy and he's built some amazing systems at the state office. And I hope he's listening and he can respond to this, but I mean, you have a pretty good grip, Scott, don't you, in terms of this COVID money versus M&O ongoing type stuff?
Yes, we do. And that's really a result of the excellent reporting and tracking of all those dollars by the LEAs. Yeah, our systems have been much improved to be able to provide that level of detail. If that answers your question, sir.
Yeah, it does. So I guess what I'm telling Tina is I think there probably is some hope that we could get some, at least in the public ed space, some good answers and trends and see, because I know some of that money's coming down now too, and
Yeah,
people are struggling.
To see it come back down as it gets.
Yeah, we've closed it out pretty much. I mean, there are still some pending late liquidations out there with 3 districts and then ourselves, meaning the USBE, but that's pretty much it. So we're pretty much closed on all the, COVID relief, ESSER, gear, all that. And we have all that pretty much detailed out. In fact, we got recognized for how well we've been able to track those dollars and where they went and for what purposes. And so, yes, I mean, we can provide those details. It would take some effort, of course, among the LEAs themselves, but we certainly can facilitate, trying not to burden them overly with administrative, reporting and all that, because we pretty much have a pretty accurate record at our level in our grant system. So
I think he just illustrated what I'm trying to explain is the CARES money was required to be spent. It's the expenditures that that was replaced by the CARES money that built the cash reserve. So you won't see a designated amount of CARES money there or COVID money there. You're seeing a buildup of the other cash because of the replacement of the.
Are you seeing that, Scott?
yes, yeah, I agree. However, I think we can work together to provide the details of what that looks like now. So Mr. Hauber's in the room as well. He's Granite School District. I mean, if he disagrees with me, or agrees with me, it will take, it would take time and effort, but I think we could demonstrate, to her point, where things landed or ended up.
Want to add too, we do have an ARPA and CARES funds
Right.
tracker on as well. So non-LEAs, so basically your municipalities, we would have that, though a caution, they haven't done a great job reporting how much they've used on the ARPA. The CARES is pretty close, all things considered, but yeah.
The ARPA isn't done,
Yeah.
ARPA would be liquidated under the state municipal fiscal recovery program. By December 31st of 2026 is when all that needs to be liquidated. Whereas CARES, part of it is done. Yeah. That program is still over there. It's kind of that second tranche under ARPA that for a lot of things, not counting the education money that came through and stuff like that, for a lot of buckets of money coming through.
So this discussion made me want to just pop over to a different page on this dashboard, which is our unrestricted cash and cash equivalents. This comes out of our review done by humans of the annual comprehensive financial reports, where our analysts will look through and say, yep, this is cash that's restricted or assigned to some kind of purpose, but the unrestricted, they'll tally all the way up and store that in our database. And so when we're talking about I don't know how much, or as Tina was referring to, how much do they have on hand they could kind of use for a lot of different purposes. This unrestricted cash and cash equivalents might be a really good place to start. We won't be able to say, what is that purpose per se, but we can at least see, is it growing? Is it stagnating or shrinking? So right now we have counties selected, 29 right here. And we have not only just the total amount in this chart, as well as a heat map showing who has the highest. No surprise, Salt Lake County has the highest up here. We also show the percent change. So you can see percentage wise, whose unrestricted cash and cash equivalents is growing or shrinking, as well as the change in total dollar value as well. It looks a little messy because, it is a little messy, but I think the table is kind of helpful to see who's going up, who's going down. And you can come in here and select any type of government entity. So if we wanted to come here and select our school districts, we could do so. Though I think we would probably want to use USB's data. They'll be a little bit more granular. It'll take just a sec because it's going to be plotting about 160 different lines, making them all interactive. That's why we started it with the counties. And now you can see here's how these school districts are looking. Alpine School District, very large. Let's see this over time. Scroll down to the very bottom. Now you can look at percent change. And so you're gonna get some weird ones where maybe they were like 0 and then they shot up to a number. That's what's going on here with Nebo. A very small, low number will make it look a little funny.
Percent change over previous year's balance?
Yep,
What-
over the previous
Percent,
years.
percent of total budget, is that a way?
Think like growth in unrestricted, so unrestricted from the prior year, that growth.
Can you look at it as in relative size to their budget though?
Yeah, like total revenues or something like that.
Yeah.
Yeah, we could. Yeah,
Just
let me
get
make
an
a note.
idea of
We'll
somebody's.
make sure to add that. And we can do this for not just your unrestricted cash and cash equivalents, any of those fields we get. So you have your total revenues, total expenditures, total governmental funds and expenditures, so on. So
I do think we need to, like you identified Alpine School District as having a very large cash and cash equivalents balance, but what's that?
It's gonna divide now.
Yes, yeah, it's gonna divide plus,
Like I
there's
said.
2 high schools within about 7 minutes where I live that have close to 4,000 students each. And so you've got a lot of potential building that's gonna happen and eat up some of that too, so I think we do need to make sure that we look in.
Like I said, there's gonna be.
Different entities,
every
different
entity is
issues.
gonna have
Yep,
different
that's true.
issues there, and
Yep.
that's been our caution all the way
Yeah.
through, is you have to be.
Yeah.
It's harder to make a blanket statement for.
Yeah, and they're elected to manage that. I'm just trying to relay what I've heard from legislators. This isn't my issue. My issue is what you're doing with that money when you're not using it. But as I raise that issue legislatively, legislators immediately go, why is there so much of this?
And I,
I
to
can't
be
answer.
fair, I think there are legitimate reasons to ask the question, and and especially when you see that overall trend line over time and the way that it's going up, it's a legitimate question to ask. My caution is just in the taking into consideration all of the different reasons why it's there. And you'll find some that are very valid, you may find some that aren't. That's our job, we see that all the time, so. Welcome to our life.
all right, any more thoughts on this one? So we can do total revenue or unrestricted in relation to total revenue, or budgeted revenue. Are there any other things we might want to add from the ACFR and pull out? This little group here. Oh,
So it sounds like you'll give us this tool and it's up to us to take a look and see what we see.
Yeah, and
Yeah.
to give us feedback on what else would be helpful in making a decision or making an evaluation of what we're looking.
think things too, like, would it be helpful to be able to get more granular? Would it be more helpful to just have the state, all the entities as a whole? Do you want it by government type? Those kind of things. And we can just brainstorm as well. We could try things out. It's all really just about supporting you guys and helping you have the data to answer the policy questions you want to answer.
Hey,
I think
so I'm sorry, this is Scott again. So I think it is the, details and if the juice is worth the squeeze to go into this. Each school or district, we've hit on a lot of the reasons that are, where we would see similarities on what's in, why their reserves are as high as they are, bond covenants, those types of things. But there are other reasons too. And Todd could probably expand on those as well. Mr. Haber could, there's employment, reserves, those types of things to, meet, insurance needs. And maybe, this was brought up earlier, but I really think that what the public is interested in is seeing that. I think there would be a lot more understanding of why those balances are there if we were to go, provide examples of, beyond just the bonds and beyond those aspects, of the reserves held for construction, is what other things are, in there that do it. And I think we've said that earlier, but I really, and I'm not sure we have to go into every LEA and do that, but the ones that got the most attention as far as their balances, it might be worth it. Like I said, the juice might be worth the squeeze to go really in and let them tell us precisely, why or what, what's in there. Because I think that there would be a lot more understanding if we were able to provide that level of detail. But could we call on Mr. Hobber to see if, he's going to unfriend me on Facebook for bringing this up or what? So,
All yours now. I have to be careful that there is a difference between cash on hand and
Right.
reserves.
right.
Measures. And if you're asked the reserve question and you try to explain it in context of cash on hand, it makes no sense. If you try to answer the cash on hand, you're gonna talk about reasons why you have cash on hand that don't make sense in the reserve. So we just have to be careful what we think we're talking about when the legislator asks a question or the public asks a question. I've been on the speaking tour, whatever tour in my district trying to explain our reserves, not so much the cash balance, but I always have someone come out with the actor and say, well, your cash balance is this other number. Why are you hiding money? So we have to be careful that way. If we talk in terms of cash, we do have cycles. Property taxes collected once a year. It comes due November 30th. It gets collected over a couple of months, depending on how quick people are. Our reserve, our cash balances will just jump through the roof. So if you're looking on a monthly basis, you look at us in December or January, we've got a whole year's worth of money, plus what we haven't spent yet from the operating year we're in. So, when you had granted up there, you had us north of $400 million. Well, when you looked at the December date, you almost have 2 years worth of money sitting in that situation. So cycles matter. And when you come and take the measure, you got to know that. There has to be a footnote or something that says it depends. Look at me in July, it's a different number than look at me in December. And then I think to what Scott's referring to, we do have payroll. Our payroll does not come out on 1/12, nice and even. We have a school year of 9 months. And so you'll have higher payroll expenses. So now we're in treasury management. And when does the money come in and when does it flow out? And we keep on top of that as well. And that changes again over time. That's your cash story. The reserve part, we also have benefits that we are required to have reserves for. I don't know what else to say.
Yeah.
You have overheads, we're self-employed. Our district is self-insured for health insurance, workers' comp, risk and all of that. So we have reserves and we have prudent reserves and there's no law that says you have to have 25% reserve. But we're gonna have that much there because I don't need a NICU baby to come through or a cancer situation to come through and wipe out all of my available funds. I won't have enough collected in premiums in any year to cover those types of expenses. So I have prudent management of what I'm doing. But that's a reserve story. It doesn't help the cash story so much. That's like I'm pulling all these monies. But could I be investing some amount below or my typical in and out year? Probably. But I will need something on hand. I need that liquidity in life, day expenses that come through. I don't know if that helps, Scott, what you're describing.
Yeah, no. Yeah, thanks, Scott. Yeah.
Servers. You're saying you have investments outside of cash, right? That have been exempted from the Money Management Act, which we do not. Okay, so our reserves are all in cash. Sure. Grant School District is it's in the PTIF cash flow. Okay. I just, because you're saying there's a distinction between your cash and your reserves, and so I was trying to understand that. My cash position last year was like 300. But my reserves like 350. So I have accounting noise in the numbers. I have GASB requirements to recognize my,
See, so Kurt, that's why I thought it was important to bring this up, right? Because we could all be looking at a snapshot in time, so to speak, right? And you could see that, but if you don't start to break it out between what the influx just was or, what has been taken out and those things, you just have to be, I just really feel like the group would need to be considerate of that, right? So that we're all operating under the same common picture, right? Of what makes up that particular balance at that time. So does that help? over?
Yep.
Okay,
Typically, cities and school districts, I'm sure, look at reserves as that's basically your savings account, but
Yeah.
your cash, you can have committed cash in there that, you've got liabilities already in the books, it just hasn't been spent on, so your cash will be higher than your reserves, but your reserves will, if you're talking about all your cash and cash equivalents, your reserve is going to be cash within that total allocation, but there's gonna be a portion there that if you're looking at all cash, some of that's committed. You've got contracts out, you've got projects that you're gonna have to pay on. Your council, your boards have budgeted for. You've got actual invoices that are on the books that haven't been expended yet, and that's what that is for.
It's the rest of the balance.
Yeah.
yeah. You see, the public really doesn't see that to that level of detail, right? But there, when I do show it to them, and I say, hey, here's these obligations that are outstanding. So we call them obligations, contracts, those types of things. They're like, oh, okay. And I said, so this balance will change, right? It'll, and so it depends on, again, when you're looking at it and what the balance is made up of. And, then even going into further granular level detail. And most of the time when we explain it to a person that's, done a grammar request or just really wants to understand it better, they walk away saying, okay, I get it. I see, why there's this requirement. I'm not arguing that there's too much or too little or thing, but I think it would be worth it if we really, tried to draw that out, those components or those details. So thank you.
Yeah, plus when you're talking about total cash, and the state auditor's office knows this very well, is that you've got all these different governmental units and business units within the government itself that have different operations that they don't share. Or if they do, there's very specific requirements when they can and cannot. And so usually it's just, you've got all these different funds within an umbrella government entity. And so you may have your cash and cash equivalents at this level, but each one's like, just a piece of that pie.
So
Exactly.
It has different functions that has to apply to. So
I'm not necessarily advocating for something here, I'm just no curiosity is. So say everything that was due, they said, okay, come next Wednesday, everything needs to be paid. Does that mean in the cash balance that shrinks down to zero? Or would that mean, it would?
your committed cash would go to zero. Your reserve or uncommitted cash would remain intact.
Is that reserves or is that?
That would be your reserve portion.
Is that the definition of unrestricted cash and cash equivalents?
That's where I go to the definition.
The unrestricted, that's kind of everything else that's left over, just kind of if you're looking at fund statements and stuff within there, there's different categories of, restricted fund balance or committed fund balance or assigned fund balance, and then unassigned fund balance. That's just kind of everything left over, and there's varying degrees of there. So it's, usually in the general fund, just that hasn't been restricted, committed, or assigned by government for purposes. And there, within those categories, there's varying levels of who can restrict it, who can commit it, who can assign it.
So is it fair to say that the reserves that you're talking about that would be in addition to whatever cash you have would be restricted balances generally?
It could, so like a bond, somebody external, like a bond holder or something like that, or even like a donor could be restricted for a specific purpose. It's something that's outside of that entity. Or restricted.
But what I'm saying is if we're trying to get the noise of the reserves out, because there's different, then if you look at just.
I want to pull up my act for,
yeah.
If you go to page 29 of my act for this last year.
Yeah.
And I only have the page memorized because I've been through a number of town hall meetings. Trying to explain this very point.
Okay.
I have pages of the act for memorized too.
Said 29.
Yeah. This last year.
Alex was frightened.
Which pair is that?
What to say.
Everyone able to see this okay?
Yeah, so if you slide down to the bottom of this page, so all this fund balance, this is.
Sorry about that.
These are all the elements or the components of our reserves. Each
Right.
column
So
represents
fund
a different
balance-
fund, but you can see some of them are not cash related. I've got inventories.
Well, I thought fund balance was equivalent to equity, right?
Yes,
Yeah.
basically your assets minus your liabilities.
Right, so that would have nothing to do with your cash.
Yeah, so if you scroll up
Yeah.
now, you can.
I mean, it does, but not, right,
It's not,
If you scroll up, here's my cash and investments line.
yeah.
So that it matters when we start to talk, what are we focused on? Are we talking about fund balance, reserves, equity, or whatever term you want to use for the context? Is that what we're talking about, or are we talking about cash and cash investments? So when we go to the dashboard, what numbers are being pulled? Is it the cash investments number or is it fund balance? And of those, the unassigned, at the very bottom, that last $9 million, that's the piece of money that hasn't been committed, obligated, or somehow spoken for by my school board in some fashion. That's available revenue that doesn't have an immediate plan. Very much different than going to my cash position and saying, oh, you have a bunch of cash on hand. Why are you holding that and you don't seem to have a purpose for it? I'm worlds apart.
Yeah.
Trying to
Right.
explain that to somebody.
Yeah.
Unassigned, really a fraction of that number. But if you want to hear the story about all of the cash, let's sit down for a minute. It's gonna take me a second to get through all of that. I don't know if that helps to have something in front of you there.
And it's very helpful. I mean, because like the debt service reserve, going back to my, about the bondholders. Debt service reserve, that's just given. You have so much of that, and you said that, and I don't even think it counts toward the days cash on hand calculation.
It shouldn't.
Because it's reserved, the days cash on hand requirement that I was talking about is in addition to the reserve.
That typically out of your general, so if you get into fund account, so that's usually your general fund. Your debt service fund is a separate fund, it's or separately, it has its own restrictions. And in fact, we have to be really careful about interest earnings on those funds, because if we want to keep our tax exempt status, we can't be in positive arbitrage. We can't be making money on the bond proceeds themselves. So we have to. So we have restrictions to keep us from making money on them.
Even though you're not keeping up with inflation costs of the actual
We got
construction project.
about that way. That's
Isn't that
in an
frustrating?
inflationary period, you can have better arbitrage.
Yeah.
So my understanding of what the task force is trying to accomplish is looking at the trend. It's not necessarily the absolute level, but if you had half as much in your fund balance or cash balance as you do. Yeah, exactly. Like if you doubled it over the last 2 or 3 years, then the question is, what justifies that? Right? That's the question. So that could show up in fund balance or it could show up in cash, you look at both, but you can't look at either of them without having an explanation.
And just having numbers will not give you that.
Yeah, that's exactly right. It has to go deeper than
You can
that.
ask, when did I draw my funds down on my bond? When the funds drop, boom, that period is gonna be way higher. I've got a project that's 5 years to run out.
Right.
I'm gonna have a balance over 5 years. And I'm paying the
Right.
contractor to get it.
Yeah, so
But
we
if
should
you
try,
don't
we
know
should
that,
try and
you
take
know-
those sorts of things out, like investing activities should be excluded from our analysis, because it's just noise to the place.
Yeah, and that, it's hard to identify that just by looking at the numbers. You have to have a separate conversation. I think
Right.
that's what Scott was getting at is, it's a lot of for the school districts, there's 41 school districts, 114 charter schools, a lot of conversations to figure out what happened over the year.
Right.
And that's before we get to cities and counties.
Yeah.
Social services.
the 1,800 entities, entities that we deal with.
Mr. Chairman, if I could just, I agree with what Kurt said. I mean, I think trend analysis is probably gonna be the most useful, and to the extent that it points us in a specific direction, then we might dive in there. I think when we get, and I don't want to speak, for Val, but what I think as a task force would be helpful if we could report just the fact that we've looked at it, and, we considered all this, and give some explanations. We give legislators some comfort that somebody's done a deep dive on it. Because the numbers are pretty impressive when they're thrown out in a committee meeting. You've heard them, and so it gets people's attention. To the extent that we could find a handful of things that we could do that would, address an issue we might find through a trend analysis. I think legislators would really appreciate that. If there's I'm not going to say an easy answer to something, but is there something we could do as a state, I think, to relieve some pressure on a school district, or, on a city or a county, on an enterprise fund? I don't know. I think people would really find that to be a good outcome. The other half of the equation, of course, though, is, okay, we have this money. Do we deploy it inside the state, or do we deploy it outside the state? And Marlo again does such a great job. He's got a fiduciary fund, and all of you manage these funds for your taxpayers, have this obligation. But we as financial institutions just want to make sure that the calculation of the value of depositing it locally and turning into a loan locally to build a house or to build a business or something locally is taken into consideration beyond the analysis that Marlo might do, in terms of saying, based upon the risk, this yield is the best place to put this money. We just feel like that calculation is insufficient in the grand scheme. I think that's what the group that's doing your analysis is going to report back. So if we cover those two nuts, I think the legislators will be very happy with the outcome of this task force.
Yeah. And with bond proceeds where you can't arbitrage, right? You can't earn more money than you are paying out as with the bonds, right?
Essentially the par value, you have to pay attention.
Yeah.
You go through federal calculations to prove.
And is that an IRS thing?
Yep. You jeopardize the tax status of the issuance.
Yeah. So then where do those monies typically go?
So we can earn interest to that point.
Yeah.
And so in Brandon's case, we have several accounts within the PTIF. One will be our bond proceeds, so it's easier for us to do our interest earning calculations to demonstrate that we don't the arbitrage. So we use the account purposefully to do the math for us. But it's sitting there until I have to draw it down to be my contractors capital project.
But if
I have
issue
arbitrage action, I have to return it to the federal government.
Yeah,
That's that question.
Yeah.
If I am caught positive arbitrage, I pay penalties. If I return the unearned or the unjustified earnings.
And just out of curiosity, you had positive arbitrage and particular bond issues recently?
Yes.
Yes.
They did not repay.
When the interest rates jumped on us, PTIF started doing wonderful
Yes.
things for us, and we're all happy on the general fund side. We turned around and said, "Oh, our debt service, we're in trouble because we're not building our things fast. We're keeping much
Right.
you had issued the debt before that happened.
Correct. And so
But
I was locked.
As
in.
that happened, inflation went crazy, so all your construction costs went up.
But not enough by time. So now it comes to time.
Yeah.
I'm earning money on a monthly basis or a daily basis, but my
You gotta
contractors
pay
are
money
billing me
back.
on a different basis, and so we have to
Even though you're
do.
falling
It's a
behind.
complicated calculation.
Yeah.
Now, then maybe that would be one of the recommendations we could have on here to Congress or something, to say, that's BS, we don't need to be. I don't know, there should be at least an inflation factor in that calculation.
Sure.
Mhm.
I would not complain.
Yeah.
I think the bondholders would support that. Because that's a risk to the project.
And that's all the portfolio management, are they getting into bonds that are taxed to them or not? That's a whole other conversation.
Well, but I mean, there are risks that they fund a project and you can't complete it because of inflationary impact on construction materials. That's a risk to the bond. I think there's,
Yeah, the ones that may not complete the line.
sorry.
Auditors don't like to test that either, from an audit perspective. We can avoid arbitrage calculation testing, that's.
Yeah, so full disclosure, yeah, I paid $60,000 for that. Yeah, positive.
We got hit on one of our bond issues too.
Yeah.
I mean, it happened to everybody because rates jumped so quickly, so.
We did the math, 3 different calculated ways you were allowed to do it, and we still did it.
Yeah.
Is it crazy?
We're sorry we're earning so much money on the deal. We're really sorry.
Is it crazy to characterize it as Utah taxpayers' money got paid from the federal government because you were being swindled?
Yeah.
I mean, is that what's happening?
Well, because you're
Well, the
worrying
investment,
about
the interest
inflation.
earnings on it, so.
Yeah.
uh,
What's the reasoning behind it is because you're getting a taxable
Yeah.
rate when you invest the funds, but there's tax advantages to the bonds that you're investing. And so they want to make sure that the differential isn't able to be exploited. And you essentially issue bonds and then just leave them forever and flip some sort of arbitrage difference. Because you're issuing tax exempt and getting taxable interest. You know, there's a differential there that could, in certain market situations, be exploited.
Well, no, it's only 6.
That's what they're trying to prevent.
Yes, it is. You're glad.
But it's also very.
So in terms of, I guess, zeroing in on excess, right? I mean, is there an easy way that you got the unassigned? I mean, is that the number?
No,
looking at?
for this example, it's not necessarily, because it's net position, so it's your assets, all of your assets that are above, show up your liabilities above, so it's not excess cash.
Yeah.
Well, I think if you're looking for one number, and I don't think you can just look at one number, but the one number that's the most telling, I think, is fund balance, right? Because that shows how essentially profitable, right? So if you take all your, expenses and all of your revenues that come in, what's been the differential over the last 5 years and how's that grown, right? And so if there's a question on, hey, we're municipal entities, we shouldn't be, 15% profitable every year. That would show up there, right? As you look at your fund balance trend over the last 20 years. Now, keep in mind that inflation's grown by 30% over that time period. So you would expect fund balance to go up over that same time period by 30%. Just to keep up with inflation, right? But anything over and above that, seems like you'd have to have a good explanation or argument why that's growing.
And it complicates it, because Alex, you could scroll up just to the top. Because if you're just looking at a total number, you've got governmental funds, you've got enterprise funds, you've got, so like this. Even just within the governmental funds, you have 3 major fund columns, then I don't know how many other governmental funds columns you have. For different purposes, different reasons, you've got enterprise funds at the state, you've got all kinds of different levels. So it's not just one number, one purpose. The general fund is just kind of for general operating purposes, and so.
And just for laughs and giggles, governmental funds, this is the full accrual presentation of the financial position. There are many other pages that are the fund balance, which is actually what we are operating in on a regular basis. And it's the amounts that actually matter when the legislature appropriates to us, and so the tax funds go through property taxes and fees, collections. So we actually live in a fund balance or a fund accounting world. And just one day a year, if you will, we slip it all over into this full accrual a situation which then everyone's judging this off of. That's not actually part of it. It's just a picture at the end of the fiscal period. Look at our fund balance, here are the rest of us, right? How are we using these funds that are being called these groups? What is it we're actually doing? But it gets complicated really fast if you read into what are the actual decisions being made.
There's one total column and stuff for the governmental funds, but just how it breaks out, and like for the state. We have general fund, we have income tax fund, we have for transportation, we have for trust lands. There's a slew of other governmental funds as well.
I was just gonna say, the one question still that's open in my mind is, what is driven, if all the money's ending up, well, the excess ending up in the PTIF's gone from what, 19 billion to 36, 38 billion. That's what we're trying to find out too, right? What drove that, or what is drove that? Yeah, related that. Because like that's still an open question in my mind. How in the world, I mean, that's almost the double. It's something's right. If it was all COVID money, but Tina, you were saying you didn't think it's the COVID money that's sitting there.
So I think it is the ability to save other money because COVID replaced what you were spending that
Okay,
with.
so it's fungible.
So it's, because it was COVID money, it could replace what you had collected in whatever other revenue source.
Yep.
So you were able to build a fund balance based on that. So keep in mind, having all of the cash and cash equivalents there gives you the ability to say, the PTIF, if we were looking at just the PTIFs, it gives them an ability to move funds out of PTIF to somewhere else while you're looking at this. Looking at all of them together and collecting all of that information gives you the ability to then say, well, then PTIF is a good example because we are taking into consideration what they are overall. We can check all of them together and you can see the overall trend line. So I don't want to say that PTIF wasn't a good line to start with. It was keeping in mind that you could move out of PTIF to any other line if you wanted not to be examined for why your PTIF amounts were going up. So this gave us a way to capture all of it at once, but you may decide as a group that PTIF is the best way to judge the trend line over time so that you can see that trend. Including them all gives you the ability to ensure that it just doesn't get moved out.
Based on your judgment, do you think that there's been a decent amount of effort for folks to avoid being under the microscope here, getting out of the PTIF?
There were accusations being made against particular entities that they were doing that as soon as their PTIF was being examined. So this gave us a way to stop that trend.
We wouldn't want that to be a factor, in people's investment decisions, avoiding scrutiny.
Yeah.
We want them to make the best investment decisions, and for a lot of people that's staying in the PTIF, but if there's, negative political consequences from showing balances there, that might affect their investment decisions, which wouldn't necessarily, that's not what we're trying to do, right? We want to make sure they make the right investment decisions regardless of the political scrutiny, I guess.
It's like Todd was saying, an entity might issue bonds, they put that in the PTIF account, the bond proceeds, they haven't spent anything of it. So you get a $50 million bump because they issued a $50 million bond that's going to be spent over time.
Right.
You want to have that pretty liquid and pretty available to use to pay contractors when you get going.
But regardless of, why they might pull the balances out, we know that there are a lot of entities that do have large balances that are outside of the PTIF. There's other investment advisors that invest according to the Money Management Act.
Yeah.
They might target different places on the yield curve than the PTIF does, or there's some different things that they can do.
But we think we've captured that.
But so that's the other reason is we just want to be complete. When talking about your cash balances, we don't want to unfairly, target one entity over another because we're ignoring certain cash balances.
That way, if you were seeing an interesting line on one particular item, then you're able to go into that particular entity and see all of them together and see a trend over the full balances over time. And I think that's the better way to look at all of this is you would see a 30% increase based on inflation. But what explains anything that's over that 30% increase in a trend line over time? Even if you've got bond proceeds coming in once out of those 5 years, you would still start to see that go down over time. And it is that trend line that we were trying to emphasize and hoping we were capturing to give a good decision.
Mr. Chairman, could I just make a recommendation on, just try to draw some conclusions from this conversation? I know we've got a short amount of time. We've got this task force and got some really smart people involved. So to keep it working going into the next meeting, I don't know when our next meeting is. Is that on the agenda? That's right.
Not yet, but it'll be
Okay.
June.
I think it would be helpful to look at a trend, try to look at a trend analysis, and I would do it by type. I think schools are sufficiently different than cities and special districts and so forth. I don't even know how to approach special districts. Well, Grant, if you have any ideas on how to do that, because I'm sure there's quite a variety of special districts out there too. So maybe you'll have some ideas, but if the auditor's office can run some trend analysis and let's look at outliers or just look what that is by entity. The other thing I would think would be helpful would be to look with any sector, analysis of whatever number it is you think is most relevant, unrestricted cash and cash equivalents or unassigned or whatever, just as a percentage of total budget, and there's probably a operating budget. I mean, what would be there's got to be some number as a denominator that we would use to try to look for outliers. And then the staff could even potentially make a phone call and say, you've come up on a list of outliers. Can you help explain, so that you come back to the next meeting and say, here's what we found. Here's the average, here's some outliers. We talked these outliers, they just done a project and they had a cash balance because they just issued a bond, or I think that kind of a level of scrutiny would give legislators some confidence. It maybe we find something that I don't think that all the entities are all executing some strategy to, so let's look for some outliers. We could report back and focus on that at the next meeting to see if there's anything that we need to look deeper into. There may be other ideas as to how to look at it more granularly, but those would be the first two I would look at as a trend and a kind of a ratio analysis of some type.
Yes, so one of the caveats that Howard is, like, a lot of these huge increases in cash balances have not been from outliers. They've been broad-based, right? So like you look across the board at a lot of municipalities and they've doubled or tripled their cash balances over that time period, right?
Mm-hmm.
So that's how we got here. There's some themes that are going on everywhere in all municipalities that may not show up just by looking at the outliers, because the outliers aren't necessarily because the outliers might be bonding, or it might be things like that.
Be the same between school districts and municipalities and counties. I mean, I
don't know if the percentages are the same, but the trend is it's very broad based in terms of the increased cash balances at all municipalities and school districts. And so that's kind of what we're trying to solve for, not just the outliers, so.
But I think that's a great place to start. He makes a great point over if we divide this by type, and start with counties, cities, and schools. I don't know if we want to divide charter schools versus public schools, because we do see different requirements for cash balances on their bonds in those. But if you at least divide it by those, and if your comparison line, maybe I'm the evil person in the room, if your comparison line is the state and what the state balances have done over time, and you're starting to see a trend based on the overall within those, that gives you somewhere to start for your June meeting for where you want to go from there based on what you're seeing. Would that be?
Yeah. And
is that a good
I
place
agree.
to start?
And the trend is one thing, and then the percentage of budget is an outlier. I didn't mean to mix the two. I just thought that both would be interesting topics to discuss at our next meeting. We saw a big trend, different trend in one segment than another, then we could dive in and say, oh, then, but we'd have answers for legislators that ask. And then if there's outliers within the group, I'm anxious to kind of,
Yeah, because there's
know
always, yeah, if
what's-
you've got a couple of outliers that are then skewing the trend line. And that can happen pretty quickly in some of the smaller classifications types in counties. We saw it in higher ed. We have to take the U, in order to do a true trend over what's happening in higher ed, you have to remove the U. So, and that's the caution, is we can organize it that way, knowing who is skewing the trend.
I don't think we're gonna have a lot to discuss on the other side of the equation in terms of where we're deploying the money locally or not locally until we get the product, the research back from the entity. So we could spend the first few months trying to dive into this and get some answers for legislators who just see these numbers going up. And maybe some solutions.
Can I ask,
go ahead.
I was just gonna ask, the state auditor's office, if you've got budgets that are about to be adopted here, in the next month or so, would it be helpful to use those budgets as well as what they're actually accounting for as what they're saying their fund balance reserves are, and also put up on the board their capital projects fund balances, because that's part of what having the reserve funds is. You could put it over, excess reserves can go to the capital projects funds, but they're fine, but that doesn't necessarily mean that can sit there forever.
Keep in mind that this is an unfunded mandate for my office, and we do have other things we do as well, which is mostly what they assign to us, but a lot of unfunded. But that said, we do have fiscal and annual year entities as part of this analysis. So yes, we can for those that are adopting, but they won't necessarily have them all turned in, but we're getting close to that as we approach. Our next reporting cycle, we should have a pretty good one, trend on those that are on a fiscal year. So yes, and then we will see in that budget.
We also have the actuals from the prior 2 years.
Yeah, we do.
Which is nice.
I think the one other issue that people raise that we probably in this analysis we want to explore and hopefully refute is the notion that this interest income off of reserves is kind of an unaccountable revenue stream. Meaning it's not part of your certified property tax rate. It's not a tax that you're raising or lowering or anything like that. It just, and so to the extent that there might be an outlier out there. Let's say we do our outlier analysis and we see somebody that's an outlier and we find out, because this is kind of a free stream of revenue that they don't have to really account for. And so there's this incentive to build reserves and to make as much interest as possible, because that can fund something without kind of off the, like I say, we by exploring it, potentially refute it, we didn't find any, or maybe we will find occasional occurrences of it, but I think that's a suspicion that roams around that we need to address.
Well, I think from a budget officer standpoint, it's really hard to budget for interest revenue because it wasn't that long ago that we were given them 50 basis points on their money, and now we're giving them 5%. And so, when you come to the next budget year, it's like, hey, what do you think is going to happen next year? How much interest revenue should I count on in my budget? And so that becomes an issue.
It is hard.
Yeah.
And to the extent I would guess everybody in this room is doing it very prudently. But to the extent that there's somebody out there saying, hey, we made 5%, maybe we'll make 6% next year, and they budget that, they're gonna get into trouble.
So you don't spend your money,
Right.
I think generally we're all pessimists though.
Well, I think that's been the real problem is they budget for very little. We end up getting way more, which is why your budget blows out every year and you're got way more revenues than you budgeted for. It's because you just didn't know at the beginning of the year.
You didn't dare budget for it, or you didn't
Yeah.
have to budget for
You
it.
didn't have to and you didn't dare, so you just kind of ignored it. And then when you got 5% in, that's a lot of money. You got, a lot of cash.
That would be good to report to the legislators though as well, that dynamic.
Right, yeah, I think that.
And also the budgeting strategy is interest revenue to one time. So you will budget, you won't tie an ongoing expense.
Yeah, because you just don't know if you're gonna get it or not.
Yeah.
Right.
So that's your.
And that's good budgeting. Do you think anybody's not doing, I mean, is that a
The
reserve?
larger districts, you do not rely on interest rates.
You'll have a legislator, the legislative body will say, in terms of budgeting, let's ensure a fraction of what it is and take the rest and put it into a pool that could be used for one-time expenditures potentially. That's going to be if you take away the motivation of benefiting from that, then there's greater accountability of the people as well as potentially less ebbs and flows in opportunity to misuse or do something that wouldn't be aligned with the priorities. That's an interesting number that we've been dealing with, but it's not been on anybody's radar.
Yeah.
Mm-hmm.
And one potential thing I think you could do is say, all interest revenue gets restricted for your next capital project, right? So that you're not necessarily accruing additional fund balance indefinitely. You're using it for your next capital project, whether that's building schools or whatever else. So because
basically
it is one
transferring
time,
capital
right?
assets
So
from
yeah, so you have to make sure that when you go and bond, all of that interest revenue goes to, decrease the amount that you're bonding for the next time around.
Which benefits property taxpayers.
Good point.
Marlo?
Yes.
With respect to districts, I appreciate the conversation. Just very briefly, with respect to special districts and special service districts, there is a statutory limitation for fund balance or, in the statute. With respect to operations, and the state auditor's office has been very good over the years on responding to any entities, any districts that exceed that amount. And so I don't know how that same pattern would apply to other entities, but with respect to our operating fund balances, that already exists in district statute, and the auditor's office works with districts on controlling that. The part that would extend beyond that are some of the discussions that have already occurred, and that would be capital projects. Our capital intensive districts would be sewer districts. Our large water districts are very capital intensive. And so, they would have some reserves that they would be putting in place in order to go through repair and replacement on facilities that have been in operation for 50, 60, or 70 years, and other capital projects on expansion of new facilities. And so I think if the auditor's office with respect to districts could access entities that are outside, in addition to the statutory requirements for a fund balance, because like I say, the auditor's office has already been, I think they review that every year with every district audit that comes in. And if there's a entity that goes above the statutory fund balance, they get a letter from the auditor's office to correct that. And correct me if I'm wrong, Tina, but I believe that's correct, is my understanding. So we'd be happy to work with you and the auditor's office in looking at that. And kind of with respect to districts, I think it would be more focused on the capital side of things.
Yeah, you're absolutely right, my friend, and we can go back to those reports pretty easily.
Okay. Be happy to work with you.
Thanks.
Great. Well, thank you. It's been a great discussion. Just in the interest of time, I know we're a little bit beyond our scheduled meeting time. Is there anything else that anybody wanted to bring up before we end?
Did you say that we know when the next meeting is?
Our next meeting will be in June. We have not set the date yet. I can either send, I was hoping that we have some discussion on that here, but I can send out a doodle poll perhaps to
And we
task
shoot
force
for
members,
meetings, so we're shooting.
with the exception of July.
Yeah, July we won't meet, but we'll try to meet June, August, September,
So
October.
our task in the meantime, we get the link with the, then we can play around and see what we see. Okay.
Yep.
And the other thing is we're gonna plan on sending out a survey to get that context from CFOs on how they are managing this money. So if you have questions, like we were getting a lot of additional context from Granite School District. What kind of questions and context would you want from CFOs of all entity types? We can send that out as well.
Well, as a follow-up to that last little segment in the discussion, is there a way to really get our arms around what that interest income has been across the state among up, side to side and top to bottom among all the entities?
We generated 1.8 billion last year
Yeah.
In
interest income from the PTIF.
From the PTIF.
Yeah, so that includes the state and.
Is that, so that maybe that number is easy to get when you aggregate?
There's,
As a follow-up though, that's from the PTIF, but is there is money sitting other places that may or may not be collecting, and what would that be? That would be the genesis of the question.
Yeah. So I would guess the PTIF's about 90% of the cash balances that are out there. But there's another 10% that is held at other investment advisors in the state, so.
Very good.
there's a line item in the financial statements that's generally interest income
Yeah.
or loss. That does, the actual interest that is earned, but it also includes, in most of the cases, it includes the change in fair market values of those investments as well. Under GASB reporting rules and stuff like that. So it's not truly earned income, because you have unrealized gains if markets go up or whatever. It's just that, and that's just as of the point in time of June 30th or December 31st, depending on the year. So
it's not broken out anywhere.
Not earned versus, generally not earned versus unearned.
We could produce a report on the PTIF very easily. Well, not very easily, it'll take us some work, but that would have it broken out by entity and what the interest income was every year, to show that trend or whatever.
That investment income line would include all investments, cash equivalents, all investments.
But if you can get to 90% easier, then, because that's gonna be a whole lot easier than breaking out the unrealized.
Right.
And we can extrapolate if 90%, if it's 90-10, or if it's 80-20, then we can just extrapolate to an interest number. I just wanna be careful not to direct too much attention to the PTIF specifically, because we don't wanna discriminate against it. We want people responding, thinking, well, we're better off out.
Right.
So.
Okay. Well, this has been great discussion. Thank you all. We'll send out information for June meeting. And anything else that we need to?
And I may do a doodle poll for other further out meetings as well, so we can get all of those on the calendar.
Okay, can I ask that, I may have missed it because I was a couple minutes late. These are public meetings.
Yes.
Are they recorded?
Yeah.
Are they available in what way?
So they are on the public notice website, as well as the link up here, the treasurer.utah.gov /AIR, Asset Investment Review Task Force. That the video recordings will be posted on there as well.
So
and then
I
I'll
need to
create
dress up for each meeting.
Yeah.
Okay, I wasn't sure, so Friday before a holiday, I put a suit on.
You pick this Friday afternoon.
Right.
You're not the only one out there.
But
That's what-
yeah, this is just a straightforward legislative open public meeting,
Yes.
and people can. So if I have people interested, I can send them to the link and they can pretty much watch.
Yeah, they're welcome
Yeah.
to come here in person or on the link.
Okay.
So if they go to that treasurer.utah.gov /AIR, right now it's being live streamed, and we'll also post the reporting.
How many people are in?
250.
I don't think that's, last I checked, there wasn't anybody, but I'm.
So Rusty, we were just testing commitment level
Yeah.
with this Friday afternoon.
Yeah.
Yeah. You all passed. Well, thank you, everyone. We will be adjourned and look forward to our next discussion. Thank you.